You invest $1,000 in an AI company today, and you watch it multiply into 10 grand over just a few years. Sounds like an absolute dream, right? But here's the massive question everyone across the US is asking as we look toward 2026. Are AI stocks still a golden American opportunity, or are we staring straight down the barrel of the biggest market bubbles since the dot-com crash? Okay, let's dive into this. We are literally living through a modern technological revolution, and the stakes, they couldn't be higher. Billions of dollars are flying across the markets, completely reshaping our economy in real time. But with that kind of intense, lightning-fast movement, we really have to stop and ask ourselves, are we actually mining for gold here, or are we just pumping air into a giant bubble that's destined to pop? You know, that tantalizing leap from $1,000 to $10,000, it isn't just a fantasy. It's the entire core thesis of the current boom. Some of these companies have doubled or even tripled in value practically overnight. But is that kind of explosive growth actually sustainable? Well, let's map out exactly how we're going to figure that out.
Here is our roadmap for this explainer. First up, the AI gold rush. Second, are we seeing a dot-com bubble repeat? Third, why AI is different. Fourth, we'll cover the top investments for 2026. And finally, smart wealth creation.
Section 1, the AI gold rush and its massive market transformation. I mean, AI is suddenly everywhere, isn't it? ChatGPT and AI-powered engines have completely rewired how we search for information. Self-driving tech is advancing at absolutely breakneck speeds, and businesses, they're automating their workflows from the ground up. Because of this massive shift, Wall Street has just poured billions into AI, resulting in stock values that are doubling or tripling. It's a gold rush in literally every sense of the word. Section 2, a dot-com bubble repeat? Let's look at history's warning. You know, whenever investors get this euphoric, history usually flashes a big red warning sign. And this brilliantly illustrates exactly what happened during the late 90s internet boom. Investors were caught up in this massive wave of extreme optimism. They genuinely believed that just slapping .com onto a company's name guaranteed success. Valuations skyrocketed based on pure, unadulterated hype. But eventually, reality hit hard. The bubble burst, companies vanished overnight, and everyday investors lost billions. History shows us that every major tech revolution creates both massive winners and devastating losers. So the crucial step for us today is understanding the specific pressure points facing AI companies right now. Look, many of these stocks are severely overvalued. They're priced entirely on what might happen in the future rather than actual current profits. And if those massive expectations aren't met, prices could absolutely plummet. Combine that with the US Federal Reserve raising interest rates, a slowing domestic economy, and some fiercely intense competition, and well, you've got the perfect recipe for a popped bubble. Moving to Section 3, why AI is different, focusing on real economic value. Okay, so we've seen the massive hype and we know the historical warnings. But why do analysts argue 2026 is fundamentally different? Well, it really comes down to reality versus hype. The late 90s internet boom was mostly driven by invisible expectations, right? People were basically investing in ideas. But the 2026 AI boom is different because AI is already bringing in real, tangible revenue through practical applications. It's not just some cool concept. It's a functioning everyday utility. Let's break down how that utility actually works. AI isn't just waiting in the wings for its big moment. It's generating real value right now. Businesses all across the country are actively deploying AI to slash their operational costs, drastically boost their daily productivity, and hyper-personalize the customer experience. This proves the tech isn't just a speculative bet. It's driving real economic engines today. Section 4, top investments for 2026. Let's look at the big players. If AI is creating all this real economic value, where exactly is the money going? Well, coming in at number 1 is NVIDIA. Think about it. In any gold rush, the folks who make the most money are the ones selling the pickaxes. NVIDIA's insanely powerful chips, they're the pickaxes of the AI revolution. They are the absolute foundation required to train and run advanced AI systems globally. Number 2 is Microsoft. And Microsoft isn't just tinkering with AI in some hidden lab. They're deeply embedding it into the tools millions of American businesses already use every single day. By directly integrating AI into Microsoft 365 and their Azure cloud computing service, they've really cemented themselves as an inescapable leader in the space. Coming in at number 3 is Amazon. What's absolutely fascinating about Amazon is just their sheer reach. They're deploying AI across a massively diverse ecosystem. their core e-commerce platform, their super complex logistics network, their cloud computing services, and yep, even those smart devices sitting in your living room right now. They've built multiple distinct pipelines to profit off this revolution. At number 4, we have Meta. Meta is literally pouring billions into AI specifically to supercharge their core business models. They're radically improving highly targeted advertising and creating those, slightly addictive social media recommendation algorithms. For Meta, AI isn't some little side project. It is their long-term survival and growth engine. And at number 5, we have a completely different approach entirely. AI-focused ETFs, or exchange-traded funds. Now, what's really interesting about this approach is that for everyday investors who just don't want the stress of picking individual winning stocks, ETFs offer a brilliant shield. They give you broad exposure to multiple AI companies all at once, naturally lowering your risk through diversification. Basically, you get a slice of the whole pie instead of betting all your savings on just one single slice. Finally, Section 5, smart wealth creation and taking a long-term approach. So, we've seen the incredible upside and the very real risks. How do you actually navigate this? The truth is, nobody has a crystal ball to predict a market correction. Actually, scratch that. No one ever knows for sure. But the smartest strategy for the next decade relies on 3 unshakable pillars. You want to look for companies with real, proven revenue, not just big promises. Look for strong balance sheets that can actually weather an economic storm and demand distinct competitive advantages that separate them from the pack. Listen, if you take only one thing away from this explainer today, let it be this. Don't invest based on hype alone. Artificial intelligence is undeniably a generational wealth-building opportunity, but you absolutely must do your research, understand the risks, and play the long game. Calculated, rational investing will always, always outsmart blindly chasing the latest trend. So, America, it's time to weigh in. You've seen the data, the massive potential, and those glaring historical warnings. What is your verdict? Is AI the definitive future of your portfolio, or are we driving straight off the cliff of a massive stock bubble? Drop your thoughts down in the comments below. And hey, if this explainer helped you cut through the noise, hit that like button, subscribe, and turn on notifications so you never miss our next breakdown. Thanks for learning with me today.